Hello, everybody. Welcome back to the channel. My name's Max. I have a very special guest today. I have Cy on. His company is Tapp Alpha, and he has a fund that's called TSPY. Now, I've had him on probably a month and a half ago when the fund first came out, and so this is a little follow-up session. Hey, Cy, would you care to introduce yourself and tell us a little bit about your company and how you got in the business?
Yeah, we'll do. Max, it's great to see you again. You were actually my very first online interview that I did when the fund first started, so it's fantastic to be back.
Nice.
So Katara, co-founder and CEO of Tapp Alpha, started the company about 18, 19 months ago, and then Max and I had the conversation just when we launched our first fund, TSPY, back on August 15th. And so this is a great kind of opportunity to review the performance, the experience that we've had, some of the decisions that we've made. But the fund is essentially, TSPY. So tap the income potential of the SPY is how you can think of it. So we own true SPY shares, and then we have a daily zero DTE covered call strategy on top to get additive income within the fund and then distribute that to our investors.
All right. Well, Cy, let me ask you this. When you came on, you'd mentioned that this ETF was going to pay 6 to 8%, which would have been great. I mean, JEPI is a good ETF. It pays 8%. Nothing wrong with 6 to 8%. I noticed it paid higher, and I've heard that you have had a pivot. You made a change. Could you tell us about that?
Yeah, absolutely. I think the big inputs that we were sort of taking from the market, where we have a choice. We could have the fund that performs exactly the same way that we have. So right now we're beating the S&P 500 by a bit. If you annualize it, maybe 6 to 8% on top of the S&P growth, which is fantastic if we can keep it up. But with that, the question is, what are you going to distribute to your investors? And the original thought was, let's just distribute what we have to, which is the premiums from the options income. But then as we sort of talked to more and more of the market, folks were really like, we're growth, but also income investors. So we actually need a little more income with respect to what we're looking for in income investments. And so we had a choice. There's other products out there that are yielding 25, 30, 40%. And then we were on the other extreme at 7 to 8. But we looked at it, and with the performance that we had of the first month, we actually decided to sort of come in the middle and provide a truly balanced product to the market. So what we ended up doing was actually yielding the equivalent of 14.2%. And the goal is, we want to minimize any NAV erosion, take all of the premiums that we can collect and distribute it to investors, take all of the SPY dividends, distribute it to investors, and then we actually split 80-20 for the SPY capital growth. And we took 20% of that SPY capital growth, liquidated it, and then added it to that distribution, but we were able to leave 80% of the SPY's capital appreciation in the fund, which has some long-term compounding benefits and long-term tax benefits as well, to truly provide a balanced product in the market.
Well, absolutely. No, that sounds great. And so, but to go from a yield of, 8 to a yield of 14, you probably had to change up your option strategy a little bit. Are you selling a little closer to the money? Do you want to enlighten us on where you came up with the extra money?
Yeah, good point. And actually that's an important distinction. So we actually kept our option strategy pretty similar to what we were going to do when we were distributing, between 6 and 8%. So we're still at 25 delta or less.
Okay.
We're still relatively conservative, but that's a great question. Where does the extra capital come from? And that extra capital came from the growth of the actual SPY over the period. So we took 20% of the SPY growth, and that's what we added to the distribution yield in order to get from 8% up to 14. Plus, it's really worth mentioning too, since we own SPY shares, the SPY dividend that came is also included in this distribution.
Exactly, and it's 1.6%, which is not a lot with the ETFs I talk about, but it's not nothing either. And it's, I mean, that's great to know, because the funds that do the synthetics, of course, use synthetics to replace. They miss out on any dividends that these stocks have, which a lot of them don't have stocks, but dividends. Have you thought about doing this? And I think you have, but have you thought about doing this on the Qs?
Yeah, actually, that was the second fund that we've already registered with the SEC is called TDAQ, TDAQ, same strategy on the Qs. And one of the curiosities, we're trying to figure out go-to market, like what's the best direction to go. And so the original plan was do TSPY, then do TDAQ, and then do TRUS, same strategy on the
Yeah.
Russell.
Yeah.
But one thing that we're learning, we're splitting the middle with this balanced fund, which I think is a great flagship for us. But one of the things we could also do is provide two other product packages that are related. Same strategy, but it could be basically T growth. So it's all growth. We distribute the 6 to 8% like we originally planned, and then keep the rest in the fund. And then T income, where we actually distribute 25 or 30% and take all of the capital or all of the option upside and capital growth of the SPY and distribute it out for pure income investors. And that
Sure.
way we can actually cover multiple parts of the market, even though the core trading strategy is identical for all three products.
That's a great plan. And of course, other funds do both strategies. There's funds that are doing strategies on each side and in between. Well, I like where you started in between, but now have you filed for these other ones, or are you just thinking about doing something like
We're
that?
thinking about it. So we filed for TDAC. So that
I
one
knew
is,
that. Yeah.
yep, ready to go. But these other ones, this is kind of a learning that we've had since we've launched, because we've been overwhelmed with the response that we've heard of people that are really income focused. But then if you talk to people who have longer timelines, they're very growth focused. And so we want to take the successes and the capabilities and the algorithm that we have with our core strategy, but we can package it in different ways to meet the needs of what the market is asking for. And so that's what we're sifting through right now.
Yeah, I hear you on the growth focused and the people that are more income focused, but I think there's a happy medium out there that exists somewhere between 8 and 12%. That where you can have both. I'm still looking for it. If I find it, I'll let you know. It looks like, or I'll say 8 and 14, so whatever. It doesn't matter. But between there's a number somewhere that's the perfect number. I just don't know what it is. If you know what it is, you have to tell me. If I figure out what it is, I'll tell you. But
yeah, you tell me. I mean, hopefully we're hitting that thread in the needle. So I'm hoping that TSPY turns out to be that perfect balanced product. And part of it is this trading strategy is something that truly focuses on total returns.
yes.
But then finding an income and growth product that will kind of check the box for people that have a longer timeline, but just need some more income to work with over time. And that's why we landed at 14.2%.
No, I think it's a great. I think it's great. I'm going to try to show. I want to show everyone this. Look at this. You're kicking Spy's ass, spanking him, curb stomping him. Okay, now look at this. You know what I like about this? And granted, it's only a month and a half, so I mean, but it's still great to see. And I like how during the pullback of early September, it looks on here like you guys did a little better during the pullback. And anyway, you're doing a lot better during the run up. So that's convexity, right? That's what we like to see at this station.
I love it. And I love too that you use total returns as the chart that you show your viewers, because that's so important for people to understand the difference versus what you're seeing in the price charts. And this data actually isn't that common for people to get, because they'll go to Yahoo Finance and they'll just look at the price chart. So I love that you're showing total returns. Well,
and I'm big on, I don't know if you've watched my channel a bunch, I'm big on the buffer report. I'll show, and I know you shouldn't compare these funds to the parent because they're designed to, I'm not necessarily talking about yours. I'm just talking generally about all these funds, not yours. But these funds, people say you shouldn't because they're designed to underperform or whatever. That's fine. I still think it's good to see how well they do relative to that. So I like to look at relative performance of the fund to what it's trying to replicate. And like we all know, these aren't perfect replications. And if we treat them, but if we know that going in and know we can get partial replication and some income, I think these are damn strong strategies.
These charts are great too. You're spot on. I'm the exact same way. Comparing it to the benchmark is such a great way to go because it's the relative performance that really matters. Markets in general may be way down, so you can't necessarily compare to zero line. But if you compare to the underlying index, that's the perfect gauge to understand how certain funds are performing.
And also, and once again, not talking about your fund, talking about all funds generally. I can't really recall any of these funds that are down more than the parent in a down market, more than maybe a day or two. Generally, over any period of time, all of these strategies, and I'm sure yours does too, have some buffer. And you could kind of see it here. If I knew the exact day of the low, I could pull that chart up. But anyway, you can see, and I'm sure if it was a further pullback, we would see a little bit, it would be more of a visible buffer that you guys get, because that's just where you tell us what that is. But my understanding is the reason you perform a little bit better on the downside in a covered call fund is due to the income. The income serves as the buffer, I guess. So you have a 14% buffer, right?
That's exactly right. You nailed it. That's the best explanation for it. It's that buffer.
Yeah. Well, I'm glad you you pivoted. I mean, I'm glad that I'm also happy to know I was your first interview on social media, and I did see you on some other great stations. There's a lot of good people, I think, that are in this niche, and I saw you with some of those guys. That's great. I'm glad you got with them. So have we talked about AUM yet? You've doubled your AUM, is that right? Or more?
Yeah, I think when we first jumped on, we were at maybe 1.7 AUM, and now we're teasing 5 million now. So we're starting to grow. And then I think the big event and milestone for us was when we did our first distribution, which was October 3rd. So that was a week ago, and now we're starting to see some more uptick, I think, from that first distribution. So it's been awesome to see the response. It's really important for us to get that feedback too from the market, because as we're making these decisions, we want to make sure that we're providing products that the market needs and that the market wants.
Well, yeah, I would say with the people on my station, I had kind of have a smaller station, but we are more kind of hybrid focused. We want a little bit of both, but some people want all growth and some people want all income, but we're kind of right in the middle. So I think this ETF is a great fit. It's a great fit.
That's super helpful to hear.
Well, I'm glad. Like I say, I'm glad to see your success. There's no reason why this thing can't be at 10 or 10 or 20 by the next time you come on, is what I'm thinking. Maybe I'll have you on in a couple of months, or I'd really like to talk about TDAC whenever it comes out. So, and I know you can't tell me and you don't know when it's going to come out, but let's get together again soon, and especially when that one comes out.
Would love it. Love what you're doing here, Max. It's so great. You've got a lot of transparency. You've got great data sort of driven analysis that you do, and I'm really impressed with the tools you provide to the market. It's really refreshing to see the level of detail you go in. So keep doing what you're doing. It's awesome.
Thank you so much, Cy. Cy, you have a great day. Everyone, it's been Cy Katara from Tapp Alpha.
Thanks so much for having me, Max. Good to see you.